Hello and welcome everyone to the fifth episode of Beaton's 3 in 30 webinar series. I'm David Goener, I'm a partner at Beaton and I'm based in Brisbane. The 3 in 30 series took a short break while we were running the Client Choice Festival over the last little while. And I know that many of you attended that and we've had some really great feedback. But now we're back on stream again, and today's topic explores how the banker, accountant and lawyer relationship maximises value for clients of professional services firms. With us today to share their thoughts are Anna Bertram from the NAB, Angus Smith from RSM, and Linda Tapiolas from Cooper Grace Ward. Before we start, as always, we'd like you to like the video and say hi in the chat boxes, and if you have any questions, please log them and we'll endeavour to answer those later on in the session. So to start, I'd like to introduce Anna Bertram from the NAB. Anna leads a banking team in Sydney that provides services to the professional services sector. She's a career banker and has really deep experience across all client segments, from small to medium enterprises up to institutional businesses. And it really makes her well placed to talk to us today. Anna, from the bank's point of view, what value do you place on the importance of your clients having good relationships with their lawyer and their accountants?
From a bank's perspective, and NAB in particular, we place a huge value. In my experience, not only does it mean a smoother experience for the customer, but it just gives the bank a lot of comfort that the customer has a team of specialists around them that really helps with risk mitigation in our eyes. And I really consider the importance to be sort of twofold. Firstly, to deliver on a current acquisition or transaction that's at hand. And secondly, from an ongoing governance sort of sense, not just what the customer's trying to achieve now, but what their future sort of growth looks like. And key to that is having, that trilogy around them, and I think really working together to help them achieve that success. When I talk about sort of help on a current transaction, a really coordinated approach not only leads to correct structuring, workshopping on transaction, but it leads to sort of no surprises. Very often as a banker, we use accountants to sort of help structure, workshop, get something over the line and develop solutions. And it also helps, obviously, knowing that a professional has assisted with putting together the forecasts and sort of helps with the robustness of the forecasts and helping make it a bankable deal, really. And, we've had cases where, a deal hasn't progressed because of the advice from the accountant and the lawyer, or it's been not right now, and we've really sort of worked together to act in the best interests of the customer. The interests are just generally aligned around, protecting the customer's position, risk mitigation, and really putting in place a future-proof structure that suits that particular customer. And in my, as you said, kindly, 20 years sort of banking experience, where, the accountant, lawyer and banker haven't all worked together, we've had some last minute changes which have led to time blowouts and ultimately not the best outcome for the customer. So having accountants and lawyers and bankers working together, it just really adds a lot of credibility to the transaction. I also think it's really important to communicate upfront with the customer, like, what is the expectation? How can we work together? Can the banker go directly to the accountant or the lawyer for information? Because having direct access, I think, just really helps get the right information from the right specialised area, and sort of saves the customer in the long term, because they're not sort of, acting as that post box, and, they're focusing on what they need to focus on. So, in summary, any collaboration, we think just it's worth investing the time upfront to set how we're going to work together, and also in building those, relationships over time. I also sort of mentioned, secondly, in a governance sense as well, and sort of how we work together into the future. Depending on where the customer is at in their life cycle, what sort of capital they need, the bank gets a lot of comfort around knowing that they've got a strong accountant and lawyer supporting them. In that kind of trilogy type relationship that you spoke to, because ultimately the customer needs to focus on the business or the service or the product that makes them unique. And it just helps us with the ongoing reporting, understanding of that customer. And in our SME customer base, all too often we have a lot of key person risk in that main business principal or few directors, etc. So having that extended almost advisory board just gives the bank so much comfort from a governance perspective.
That's great. Thanks very much, Anna. Appreciate that. And that, I think that advisory board comment really is one that a lot of clients now are starting to look at. So I think now, and from an accountant's point of view, and we talked about that before, I'd just like to introduce Angus. Angus Smith's the partner at RSM, the global accounting firm. He's based in the beautiful Busselton in WA, where he predominantly works with SME clients. We know well at Beaton how highly regarded Angus is by his clients, because he's a 3-time finalist and a twice winner of our Best Accountant Award at the Client Choice Festival. And I think that just goes to show that ongoing relationship that Angus has been able to build. Angus, what are your thoughts on that maintaining that close relationship with your clients?
Thanks, David. It's super important. I mean, what Anna's just finished then with the advisory board issues. I'm 30 years into my career now, and I've been dealing with some businesses for all of that time. And as Anna said, there's a life cycle that business people go through, and I've been through that with a lot of them, and now looking at the tail end. To give you an example, I actually have a client that I have been with for near on 25 years, a business client, and he was very gung-ho in the way he went about his earlier business and really pushed ahead, and he now says he didn't listen enough. And that advisory board issue that Anna was talking about comes to the fore as I sort of expand on this. Unfortunately, his first business venture, it didn't end well, and luckily he didn't go completely broke, but got well and truly wounded, and took some time away, and has come back in another totally different type of field, something which I actually, on reflection, think it's probably much better suited to him and who he is, rather than where he was in the first business venture. But what he does now, and he actually has his accountant. I'm there every month having a conversation with him, and with that we often have a conversation with the banker about where he's going, what his plans are, what the longer term strategy is, all the things that Anna was just explaining and talking about. And right now, he's at every meeting we're having a phone call or Zoom call with his lawyer, because in this particular issue, he's dealing on a major strata title issue that's been going on and on and on. And the input, as he calls it, it's his business team. And it's really, really important to him, and he's really going in the right direction. And I think his earlier learning from that first experience, very bad business experience, of not listening enough, to now being involved and listening clearly, it's helping us all. And it not only helps him, but it helps me as his accountant. It's helping his lawyer as his lawyer, and his bankers as their bankers to also see his long-term strategy. Because what we do is deal with a lot of knowledge, which is all in our own heads, and to actually give that back to clients and businesses, it needs time to come to fruition, and you need to think things through. So if you're well informed, it's much easier then to provide some good advice and come up with a really good plan. And what you might miss as the accountant, the lawyer is going to pick up on, because they're going to see it from where their background is, and the banker is going to see it from where they're coming from. And I think in this particular case, it's worked really well. But more broadly across the client base, I don't think enough businesses actually realise the value of having those people that are around them. Really important to their own business working together with each other.
Thanks very much, Angus. And it's interesting, I've often heard say that the lawyers often come into the picture at the last minute, and they haven't had enough briefing often to get a job done. And as a former accountant, Linda brings a really unique perspective to this discussion. Linda's a partner at Brisbane law firm Cooper Grace Ward, where she's a specialist tax advisor and often works with accounting and financial planning firms to help them develop solutions for their clients. We also know that Linda is well regarded by her clients because she was also a finalist this year in the Best Lawyer category in the Client Choice Awards. So, Linda, what do you think are the keys to making that the trinity of banker, accountant, and lawyer relationship work best for clients?
Thanks, David. And I'm glad you actually raised that in a former life I was an accountant, because one of the reasons that I wanted to swap over to law was actually being part of that bigger transaction and being involved in working out how restructure should work from a tax perspective, and then seeing it all the way through from a commercial aspect as well. And really, it is so important that the legal team, the accounting team, and also the financier all work together and in basically every transaction, because it's really trying to look at what's the objective that the client is actually trying to achieve. So if we're looking at restructuring because we think there might be a tax issue, so a lot of, for example, a lot of people want to restructure because they've got Division 7A issues with trusts, so they want to go over to corporates. So it's actually not just looking at the tax issues, but it's really important that someone's also looking at the other issues where generally you'll have the legal team come in, and that's really looking at from an asset protection perspective. Are we really okay from that perspective? What can the legal team add to that? And the other issue is, especially in relation to a restructure, there's absolutely no point in doing this absolutely wonderful restructure for the client. Sorts out their tax issues, sorts out their asset protection, but then someone's forgot to think about that we might have unwound an estate planning plan that was put in for the client. So again, making sure that everyone is really on board on all those issues. And even on a commercial matter, the client might be exiting, and so we're trying to maximise the after-tax proceeds for the client. And again, having that knowledge of accounting and law, it does become invaluable, but you see where the gaps are. And really the accountant and the lawyer really need to be talking to one another, especially where there's a formula involved. You tend to find that once you start talking, especially on a share sale agreement, and we start talking about formulas, how we determine prices, some lawyers just sort of go, well, I don't understand all the numbers. So again, input from the accountant is absolutely vital. Again, especially when we're talking about share sale agreements, one thing a lawyer might do is say to the accountant, can you check the tax warranties? So it's really important that the accountant talks to the lawyer, and if they don't understand something, is really make sure that everyone's on the same page, because especially in a commercial transaction where things go wrong, everyone will be running to the warranty. So again, actually understanding that importance of that. And again, so many times you see warranties where people warrant that their financial statements are audited or prepared in accordance with accounting standards, etc. And I must admit, I'm not completely up to date with all the accounting standards, but I can assure you 99.9% of the financial statements I've seen, I really don't think they comply. So again, we're looking at getting the best outcome for the client. Is everyone on the same page as to those issues as well? And probably that one thing that my big mantra is on transactions is that every transaction that happens, there's generally a tax issue, there could be a duty issue, or there could be GST issues. So again, the lawyers and the accountants need to be working together as to who's the most qualified to deal with all of those issues. And there's no point finding out after and the client gets this big surprise, oh, hang on, there's GST, or we claim GST going concern, but we really shouldn't have been, because it felt like this is what we normally do. Again, lawyers checking back in with the accountant, is this actually correct? And the other issue that you see on commercial issues, and this is really in relation to banks, and whether it's, again, an exit or a restructure, and I do really feel for the banks where this happens, where people just go and transfer assets and all of a sudden the bank finds out later and all their security is moved out of this company. So again, always be aware there's probably security interests. We need to be doing PPSR searches and talk to the bank. Make sure the bank's on board, make sure they're aware of it, that we're getting consent where we need to be getting consent. And again, if it's a commercial exit transaction, doing those searches early rather than, 2 days out before completion, someone starts looking at the searches and sees that, oh gosh, we've got to deal with the bank. And really, especially now, everyone is so busy leading up to 30 June. I tell you what, I wouldn't like to be asking a couple of days before completion of a bank to start doing all these releases. So again, being really mindful that everything, it's really in the client's interest that everything goes smoothly. Just make sure that everyone's talking to one another. All those third-party consents, whether it's a financier, whether it's a landlord, etc., all of that happens to make it as stress-free for the client as possible. And that really happens where everyone's talking together, all the egos go out the door, and, okay, what's good for the client? And we do what we need to do to get a transaction over the line.
Thanks very much, Linda. I appreciate your thoughts there. I think now we can probably think about the way that we deal with clients and seeking to understand in the first instance how the client wants to deal with each of the professions. We know through our research that being easy to do business with is most important when it comes down to client satisfaction. So I'm particularly interested in, from the bank's point of view, from Anna's point of view, and what do you think about that relationship with the client, that taking time to listen to the client and understand? And I know very often people think it's not so much the bank, it's the banker, it's the person behind the name that makes the difference from a client service point of view. What do you think?
Yeah, I mean, having a strong banker or a relationship sort of partner is kind of key, really, having that relationship banker. NAB, we kind of pride ourselves on being a relationship bank, and we do endeavour to sit with our customers on a regular basis to really find out what they want to do and what they want to achieve. We do monitor what they say in terms of net promoter score and so forth, and I can assure you that the feedback isn't always glowing. So it's also how can we sort of act on that and improve. Something the industry is moving to, David, is much more of that annual review or annual review extension of their facilities, and also minimum at least sort of meeting with the customer. And I guess something that I'd be interested in Angus and Linda's view on as well is how can we do that more with the customer's other advisors, with their accountant and with their lawyer, and really add the best value that we can to the customer in terms of our different areas of specializational angles that we come at, really, to support the customer.
It's an interesting point, isn't it? It's trying to take away that client contact from the transaction. Angus, we think from an accountant's point of view, that the key touch points are, tax returns, audits, those type of things. But how do we maintain that other time to stop and think about all of the client's business? What do you think?
No, you're right. You can get drawn into those regulatory things. I look back on my career and what Linda said's I can connect to her moving over to become a lawyer, because in those first 10 years of my professional life, I kind of wish I'd done a law degree. But what became really important in the second 10 years of my professional life was a psychology degree, and because you're actually trying to work out how you deal with different people all of the time, and get the best out of them. And each client's going to have their own reasons and motivators behind them. And I often look back and think, some of the real soft skill courses I did in that 10 to 20 years are really, really valuable, because it's about the relationship and the trust that gets built through the professions and their bankers and anyone else that deals with them to actually get them along on the right track. So I think to answer Anna's question about how best you do that, I think there's got to be some relationship between the banker and the advisors and especially when you're getting onto those really big transactions to get an understanding of what's been tried to be achieved here. The client normally is very clear about what they do, but it's that circle of knowledge. If you don't know what to ask, you won't ask it. And if you've got good advisors around you that are thinking for you, like actually sitting in your shoes, trying to think what is it that you should be asking or thinking about, I think that's where it comes to. So it's just getting that close relationship and being willing to open up and talk and listen.
Thanks, Angus. Linda, what do you think from your point of view, where you've teamed a lot with accountants and planners? So what works best in that environment?
I think just being super organised, which I know we would all love to be much more organised than what we are, especially in these busy times. But I think that you need to be very mindful that everyone's got time pressures. So again, and I really feel for the banks in that fact that I'm sure they're probably one of the last people to find out on transactions that it's actually happening. So my advice is really, if there's a transaction happening, is make sure that you know what security is there, what loans have to be paid out, and start talking to the bank. So they're actually all lined up. And it might be a simple matter that we're even just transferring shares. We really need to be aware of who owns those shares, what security interest is sitting there, that we might need to even get a partial release. So I think from the lawyer's perspective, they really do need to be super organised. Just really ask those questions. The first thing that you do is, what third parties are involved here that we may need their consent? Because they're things that are potentially out of your client's control and we're relying on someone else to do something. So make sure that they have heaps of time in advance to make sure that they can do something, do their job. But like I said, I really, really feel for the banks, because I think that happens in so many times. Someone then goes, oh, hang on, I should have done a search on that. Or otherwise the buyer does the search and says, oh, where's my security release? And then all of a sudden it's the bank's fault because the bank, the bank didn't produce it in time. Well, actually, everyone needs to take responsibility here. And really, if everyone's super organised, and things do go wrong. So, and that is just the joys of doing transaction work. And it's just the fact, I just talk about it, the fact that we don't lose our cool. I could say something else, but you don't lose your cool. It's how do we fix it? Who do we need to talk to get this over the line? And again, just being mindful that everyone is under those time pressures. Don't leave everything to the last moment. So don't make your disorganisation impact on someone else, because at the end of the day, it's not having a fight over whose fault it was. It's, okay, we need to get this over the line for the client. What do we all need to do to make that happen?
Thanks. And just, we're getting a few questions coming through now. Just interested in your view. This might be one for you, Angus, and I'll just read it if I can. This is someone who, this is actually from John in Auckland. He's saying that he's got a client who's a medium-sized business. They've got a really good, they get value from their lawyer, but they don't think they get a lot of value from their accountant. However, they think it's too hard to change accountants, and that they don't have the energy to change. What are your thoughts? What do you tell people? You're mentoring many people, I'm assuming, coming through your organisation. How do you make sure that they get away from that set and forget once a year job?
That's it. And we just had a staff meeting here yesterday, and we're talking about that exact issue, about how clients and customers think it is too hard to change accountants, and it's actually a very simple process. The problem is it's the emotion that do I want to go and build a new relationship with an advisor, and how am I going to get that trust? How am I going to build that trust with them? So I say to my staff around me that you've just got to be open and honest, and you're talking to people. You're not talking to a business or a transaction, or you're actually talking to a human. So be human and actually talk to them. But by God, own what you're talking about, and be real. You know, really get involved and listen. And I kind of think that's I mean, I've used that word a couple of times, the word listen. But I don't think a lot of people, we do it enough. And Linda's right. We're all under time pressure, and unfortunately, when you're under time pressure, you normally go to your default. Well, I think you've got to work really hard on your default, and actually, that should be, you know, taking the time, listening, and you'll probably get a lot better result out of it. But yeah, I mean, yeah, a lot of people think it's hard to change your professional, but it's not that hard. Once you're prepared to take that step, it's not that hard.
What about your experience in getting the right professional? You know, in some, if thinking a law firm, the right partner to deal with someone, even you know, from a banking point of view, the right person in your organisation. Have you got some experience there to, you know, where you've actually taken the feedback, you've thought about the client, and you might have changed to get the right person for that client?
Well, I like to know who are the lawyers around the place? What is their skill? What's their preference of work? You know, so that you can actually, you know, offer up some informed advice to a client. Look, in this particular case, I think you should talk to this person because of. So you've got to put that effort into learning, and who are the people around you? Who are the bankers around you? You know, and you know, Anna mentioned about the relationship. So who are the good relationship bankers around you?
Yeah, I might just jump in there, David. There is also, the relationship and the personality side, but it's also who's got the expertise or the experience in that industry that customer is sort of looking for, and you know, making sure you consider the two angles and really think about, because we all know that you know, getting along with someone and them having the insights to be able to add value to you in any conversation, that's someone you're going to carry forward, you know, with you and develop a really long-term relationship with. So it is definitely worth, you know, considering the best fit.
Yeah, that's great. Well, thank you. Sorry, Linda, go. Yeah.
I'm actually just surprised that someone thinks more highly of their lawyer than their accountant. Usually it's the lawyers that no one likes. But just and just from my experience as an accountant to a lawyer, can I make this point to accountants? You might think that your client cares about themselves paying the least tax. Generally, that's not probably, no one likes paying tax, and we like to minimise it. But really, when I talk to clients, what they tend to be more concerned about is, how do I protect my assets and my wealth? And how do I make sure that my assets go to, in a succession planning, where do they go to the right person? So my advice to accountants is, stop. Do not just leave it at, oh gosh, I've done my trial balance, I've lodged my tax return, that's all I need to do. Because if that's all you're doing, you're really not looking at what your client is really after, and maybe that's why they're looking at changing. Just take a step back. Yes, tax is one thing, but really, especially after COVID, asset protection, estate planning, if I ask your clients, I'm sure that they would actually rate that higher than paying the tax man, because, and in my experience, people hate paying duty more than they hate paying income tax. So really just have a look at that and really think about what your client wants, not what you think that they want. That's
great. And I think that's a great way to end, because we've run out of time. It's 30 minutes goes so quickly. So thank you to Anna, Angus and Linda for your insights today. We've covered really quite a lot of ground today, but I think to pull it together, we discussed earlier, you know, the three key takeouts that have been discussed today, and one of those clearly is to make sure that you know, we know that professionals contribute more when they're informed. So maintaining that regular contact with your clients. From Linda's point of view, thinking beyond your discipline, you know, understanding those wider implications for your clients. And finally, just to build that sort of regular cadence of working together, you know, meeting regularly to discuss goals and seeking feedback. Most importantly, acting on that feedback. So thank you all for joining us today. We trust you've been able to take away some valuable insights. Finally, I'd like to invite you to the next episode of the series on the 9th of June, when Libby, John and George will discuss the dangers of discounting and give you some ideas of what you can do instead.